All right, let's talk some options. Kevin Green joins us to take a look at the intraday action here. Quite a big day. KG, we went right through a few of those levels we were watching, namely 5,500 on the S&P. So what has shifted since our talk yesterday?
Yeah, what was actually very interesting too, we also called out towards the end of the segment, the 5540 call somebody was actually layering into going into the close. So that was actually a pretty decent target for somebody today that did hit. Now, we did see a little bit of a gamma pressure to the upside on the volume side here today at 5550, and that's where we pretty much stalled out. And when we closed, or we stopped the Fed conference, we saw a sell-off. And Oliver, the reason why we actually saw this sell-off is because we also saw a lot of buyers of 5550 puts start at around 5 minutes left to go within the conference here, and that's when we started seeing this breakdown.
Wow. So like at the money puts? Because we were at 55.50 at the time.
Exactly. Yeah, we had a skew where we had put side skew as well as a little bit of a call side buildup from the residual of open interest from yesterday, as well as some volume here today. But the put side skew, those buyers that came in and stepped in, really has overtook whatever we had there on the gamma level for the 5550 calls, which is why we had that higher positive dealer gamma level was really calls being built up. But then we also started seeing some puts getting in. Now, what could actually happen though into the close? Because those 5550 puts are now in the money. Do those individuals buy those back? And then do we see a rip rally back to the upside here, hitting a critical area of support at 5515 on an intraday basis? Do we see a ramp going into the close? That's going to be the biggest question mark. But yeah, very interesting dynamic, sell the news type of an event. But we had this imbalance pretty much at the same strike, which is something that does happen, but it usually happens on option expiration days. And that's when we typically see pegs at that particular strike.
So if, let's say I bought a put that at the money, basically 55.50, we slipped 30 points. It kind of looks like just from the chart work, I'm pretty happy with that trade then to take it off at 55.20. But does that align with where the market maker positioning is, or is that further down lower where you might say, oh, let me hold on a little bit?
Yeah, so that's actually a really good question. So those 5550 puts that you would buy, that would make the market maker short those puts, and their risk is going to be to the downside. And as you continue to see prices move to the downside for the S&P 500, in order for them to offset that gamma risk, they then sell futures contracts, so the E-mini S&P futures, and that's where you create these domino effects or these meltdown scenarios until it hits a point. And it looks like we did hit a point. And if those individuals that actually held those puts now say, hey, I'm profitable, I want to sell, those dealers then buy back those contracts that they're short, pretty much trying to make themselves delta neutral. So that's exactly how that scenario goes. And that's exactly what actually has panned out here. Two different levels that I really want to call out. I don't have them on the chart, but 5530 is a key area that we've been seeing flows going into. So maybe we have a close there, but it's not outside of the realm of possibility that we actually go and try to retest that 5550 level. That's not a recommendation. That's just kind of how the scenario can pan out here if those put buyers start to liquidate going into the close.
Okay, seems like we've got some pretty good lines then set up. The gap open from overnight at 5,500, and then the high for the day at 55.50. So as long as we stay in there, a pretty good victory for the day. But I mean, anything at this point, as long as we don't like totally unwind, it feels like a pretty monster success for the bulls.
Yeah, definitely. And actually, if we can look at open interest, I think that's going to also give us a little bit of a clue as to what's happening in this market. We always talk about this scenario where we start seeing these levels starting to widen out. And those levels widening out is actually really constructive, not only for bulls, but also for bears. That means that we can have wider ranging markets. And that's what's happening today as well. We broke through a really key area of resistance. That area of resistance became support, which is around the 5,500 level. I have 5,580 because that's really where the concentration is lying at right now. But we had that breakout, and then we had that test to the upper end of that gamma level there. But the reason why I want to bring this up, bull day today, pretty much every sector for the most part is in the green. A little bit of an intraday pullback, not a concern. You're still up around 1%, 1.6%. That's a win in anybody's book. But I have that purple line at the bottom there, 5,400. Here's, you do not want to test that moving forward. Now, we tested it in the past over the last, week and a half, and that's been an area of contention. But if we go back and retest that, Oliver, just knowing the position that we probably have on the books after today, that would most likely signify the fact that we will probably break down even lower. So that's kind of that line in the sand. We have our negative dealer gamma level at 5,480. That's the true level. But your really big line in the sand, if you're looking at a weekly chart, 5,400 you do not want to touch that level moving forward here. That would be a cause for concern. I wanted to highlight that just in case we get some bad reports from Meta and some of these other major names in the next couple of days.
That's good to think about because that's exactly where we went yesterday on Microsoft. And boy, that turned out to be a monster trampoline. That level just bounced right off. So it seems like there is a lot of buying pressure there. So if it were to fail, then I guess that means the bulls are basically exhausted.
Exactly. And, that Microsoft, announcement and that sell-off was not good. And everybody's got to, thank God for AMD and bringing us back. I mean, when you're looking at that bounce back from NVIDIA, I know we're not talking about the indexes, but that bounce back from NVIDIA is also another scenario where on an individual equity level, we had a gamma squeeze that did take place. You had some really positive news. You had some resistance sitting at that 106 and a half level. And then we kind of broke through that. And today we hit up to $118. That's the type of situation that you want to really see here for those mega cap names to try to bring those broader indexes up. And that is, once again, going to be ultimately bullish. You don't want to see a breakdown of that further on because we've already retested some of these support areas, probably a little bit way too much over the last week and a half.
All right, great stuff. Any VIX thoughts real quick, KG?
Looks like we're going to potentially come out of the backwardation. We're really, really close, Oliver. I would not be surprised if we do get out of this backwardation by tomorrow. And if we close at these levels, we will be out of negative gamma territory. And that means that market makers can now compress volatility and we can have normalized markets, which is ultimately bullish. So those two scenarios is something I'm definitely keeping my eye out on over the next 24 hours.
All right, great stuff. Thanks, Kevin Green.